Exactly a year and 3 weeks ago, I had declared on Daybreak that quick commerce was dying in India. Companies like Dunzo and even Blinkit were shutting down their dark stores. Analysts and experts thought that 10-minute deliveries were becoming a relic of the pandemic. How wrong everybody was. Quick commerce in India right now is on steroids, especially Zepto. Even back then, it had stood out because it was going against the grain. While everybody was rethinking the 10-minute delivery business, Zepto stuck to its guns about getting you your delivery within minutes. And a year later now, look how it has paid off. Zepto is the third largest company in the quick commerce market in India. It recently secured its biggest funding ever at a $3.6 billion valuation, mainly from its existing investors. Venture Intelligence, which is a data provider, told the Ken that the over $600 million funding is the largest bet made by VCs in Indian startups this year. And now, our sources told us that Zepto is planning to raise another round from top-tier global VCs at a $5 billion valuation. And next year, the company is planning to go public. So, what did Zepto do to get all of this attention from investors? Welcome to Daybreak, a business podcast from the Ken. I'm your host Nigda Sharma, and I don't chase the news cycle. Instead, every day of the week, my colleague Rahel Philippos and I will come to you with one business story that is worth understanding and worth your time. If you're a regular listener of Daybreak, you will probably already know a fair bit about the quick commerce scene in India right now. Blinkit has emerged as the market leader with a 40% share. Then it is Swiggy Instamart, followed by the hero of today's story, Zepto. But before I get on with the story, let me just remind you that a few weeks ago, we had released a super fun and interesting Friday special episode of Daybreak on 10-minute delivery apps, how they're shaping us and how we're shaping them. It features our in-house quick commerce expert and writer of our most popular newsletter, The Nut Graph, Praveen Gopalakrishnan. You have to listen to it in case you missed it. I'll link it to the show notes of this episode. So, where were we? Zepto, right. So, what has gotten everybody, especially investors, so excited about it? You see, even when it came into the picture the first time, Zepto was a disruptor. It was the one that made 10-minute deliveries a thing in India. Now, at number 3 behind Swiggy Instamart, it seems to be very rapidly closing in on that gap. The company is also preparing to go for an IPO sometime next year. Meanwhile, it is doing all the prep work. It is meeting investors outside the private circle. It has also been conducting roadshows and engaging with fund managers and brokerages such as Goldman Sachs and HSBC Securities. This is important because it is these firms which typically provide the buy, hold, or sell recommendations on listed companies. And they have published notes on Zepto. The Ken's Akriti Bhalla spoke to Zepto's 23-year-old founder Adit Palicha, and he told her that Zepto is not focused on competition because it has already captured a significant market share. An analyst at a domestic brokerage told us that for now, it is a give and take sort of a situation. They said that for analysts, especially those who rate Zomato, it is an opportunity to assess Zepto, which basically competes in the same space as Blinkit. And for Zepto, it can gauge what kind of valuations it can get. Another reason behind this investor enthusiasm is that quick commerce has shown viability in India. Everywhere else in the world, it has struggled to grow and kind of burnt the hands of many VCs. But most VCs backing Zepto now likely foresee quick commerce to be at a point where e-commerce was in the early 2010s. They expect going all in will eventually lead to big exits. Just like how Tiger Global, the VC giant, invested more than $1 billion in Flipkart between 2010 and 2015 and saw 3 times the returns. All of this goes back to Zepto's decision to go against the grain. It stayed true to its commitment of 10-minute deliveries. This was also because its investors supported it and they continue to raise their stake in the company. Sajid Pai, who is a VC at Bloom Ventures, told the Ken that Zepto's latest fundraise is a coming together of a whole bunch of essential factors: a well run business, benchmarkable metrics, high quality founders, positive sectoral perception, and of course, a large market. Pai says that the global growth funds see this as a once in a cycle opportunity to go all in. Stay tuned for more on this. The more than $600 million that Zepto raised in its latest funding round was mainly from its existing investors. Let's take a look at some of them. The first seed funds that Zepto founders got were from Y Combinator or YC, the Silicon Valley based early stage startup aggregator. This was back in December 2021. A founder who did not want to be named told Akriti that Palicha, who had dropped out from Stanford, very quickly became the blue-eyed boy of YC's partner Anu Hariharan, who at the time was heading its YC Continuity Fund. YC backed Zepto from seed to Series D round. It also helped Zepto connect with investors, including Gladebrook, that backs the likes of Airbnb and Uber. Nexus and Gladebrook have been investing in Zepto since the Series A round in 2021. Now, when early investors continue to participate in new rounds, it proves their desire to maintain their stakes as the company raises more funds. So you see, when these investors pour substantial resources into an international player like Zepto, it shows that they are confident that it will succeed. For context, Nexus's investment into Zepto's latest round of funding represents approximately 20% of its latest fund size. In 2022, during the economic downturn, when investors were very careful with spending, it was Gladebrook that encouraged Zepto to go against the wind. Paul Hudson, the founder and chief investment officer at Gladebrook, said that Gladebrook advised Zepto to raise more capital, open more dark stores, and essentially run a more aggressive playbook when others would not. So, how did it all play out? I will tell you in the next segment. Cut to 2024, and Zepto has claimed a yearly gross merchandise value of $1 billion as of March, with 75% of its stores becoming profitable last month. The company also reached store profitability sooner, reducing the time from 23 months to 6 months. In contrast, Blinkit reduced this time from 6 months to 2. Also, Blinkit and Instamart have pushed for extensive expansion with their presence in about 25 cities. Zepto, meanwhile, has focused only on 10 key cities. Also, the biggest factor of all, which I mentioned earlier, is that Zepto has consistently delivered on its promise of 10-minute deliveries. It managed to stick to it through the initial excitement, then the skepticism, and then the eventual widespread adoption. To draw a comparison, Swiggy Instamart initially aimed for 20 to 30 minute delivery time frame before adjusting its approach to 10 to 15 minutes like Blinkit and Zepto. The other factor that's also played a significant role is India's unique grocery market dynamics that are unlike any other place in the world. Metro cities here are getting denser, and along with them, the middle class is expanding. It is a huge market. Glenn Brooks Paul Hudson, who is also one of the 5 members on Zepto's board, explained it to us. He said, when you're building a quick commerce company in the US or Europe, you're competing with Walmart, Costco, or Target. Those companies have scale advantages. In India, on the other hand, 90% of the grocery market comprises of local kiranas or mom-and-pop stores, and they are not able to extract the scale benefits like a Walmart. And this is the opportunity that American VC firms seem to have identified here. And last but not the least, What also made this funding round stand out is that Zepto was not actively looking for investors. Hudson, in fact, told us that the company had to say no to many. They wanted to keep the round internal so that the existing investors could chip in. They also wanted to close the round soon and were not looking at maximizing valuations. But here's what Sriram Sundararajan, a professor of marketing and venture capital at Santa Clara University, said to us. Good founders do not raise funds when they want to. They raise them when they can. In Zepto's case, they have managed to convince their investors over and over again about the company's execution. In fact, co-founder Palicha further substantiated this point by telling the Ken about the goal of building a $50 billion public, profitable and world-class company. But while all of this, I'm sure, has painted a very rosy picture of Zepto in your head, here are some things worth considering. An analyst at a Mumbai-based brokerage firm told us how public market analysts are brutal. They analyze every line item in the financials. And Zepto's narrative of being run by two Stanford dropouts is a good story, but does quick commerce business have the ability to give returns? Another analyst said, and I'm quoting them, "It reminds me of Nykaa when it became public. The story being sold was that of an exceptional 50-something entrepreneur who single-handedly changed the beauty market. Where is the stock now?" End quote. Meanwhile, Satish Meena, an independent e-commerce analyst, said, and I'm quoting him again, "I believe from here on, growth will slow down and the pie will not grow as fast. Like we saw in e-commerce, even in quick commerce, players will be fighting to acquire the same customer." End quote. While we'll have to wait and watch whether that turns out to be true or not until Zepto goes public, for now, Zepto's giant funding round only means game on.
Daybreak is produced from the newsroom of The Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. To subscribe, head to theken.com and click on the red subscribe button on top of the Ken website. Today's episode was hosted by Snigdha Sharma and edited by Rajiv CN.